was reading an article the other day about HELOCs, home equity lines of credit. And the article basically said that folks are taking out HELOCs at a faster rate than they have in a very long time. And that makes a lot of sense for a couple of reasons. Obviously, on the front end of it, folks have a lot of equity that's been untapped. We've seen housing prices skyrocket over the last couple of years. And even if you're just making that minimum monthly mortgage payment, you're getting a lot of additional equity now as the prices increase. On the backside of that, a lot of people are having to deal with inflation. And prices, not just of houses, but of everything else, is also going up at a rapid pace. And we're also now seeing interest rates taken up by the Fed as they try to combat inflation. And so a lot of people are starting to feel pain, and they're starting to think about how they can find some extra cash, borrow it, in order to be able to pay just even their monthly expenses. Some folks are thinking about, maybe needing to get a used car. Some people are realizing, well, it's tax season and next month they're going to have to potentially pay a bill for their taxes. And so, a lot of people are strapped for cash. And so I was talking to my wife about this article and the fact that the HELOCs are taken out at such a rapid rate right now. And she asked me a question that I thought was interesting. She asked whether it's better to take money out from your credit card, do a cash advance, or if you should tap into your home equity and get a home equity line of credit. And when you look at on the surface, the answer would typically be, from an interest rate perspective, your home equity line of credit is probably the right answer. But I'd caution you to take a look at offers out there on credit cards, especially if you have a credit card already open right now. A lot of them are still offering balance transfers or even cash advances at 0% or maybe a 1.9%. But it's worth taking a look at to see if there are any offers out there on your credit card right now. And I walked my wife through an example of this because I opened up my credit card and I saw that right now I do have an offer available for a 12-month period. So specifically right now, the example I told my wife about is just for the next 12 months, what's the best place if we needed to go borrow cash? Where would we turn to? And so there's really, again, two examples we're talking about right now. But theoretically, if you need to borrow $10,000 for whatever reason, again, why you need it is not really the discussion here. It's more or less, where might you turn? And so I was looking at HELOC rates to compare, and right now I found a HELOC. It seems like the going rate is somewhere around 7 3/8, maybe a little more, maybe a little less, depending. But these are typically variable interest rates when you go and take out a HELOC. Sometimes you can get fixed. A lot of times people get the variable, and that's pretty high right now. If you had taken that out 2 years ago, that could have been at 3-4%. A lot of times they actually give you a discount on your interest rate for the first 12 months if you take out the full amount of your HELOC for 3 months before you pay any of it back. You sign up for auto pay, things like that. They actually offer you teaser discounts. But in any event, right now it's super high, 7 3/8. And borrowing $10,000 on 7 3/8, the way they calculate what your interest is that you owe, the simple math is really just 10,000 times 7.375% over the course of a year if you keep the $10,000 borrowed. Now you'll still have to pay the interest every month on that. Sometimes HELOCs are interest only. Sometimes they are interest plus a small percentage of your principal, and there's a formula that they use to calculate how much of your principal you would pay back, and it's usually the amount of time it would take to pay the whole thing back over your term of the HELOC. But in any event, what they do, if you wanted to know on a daily or monthly basis what your interest is going to be, they take this number, this APR, and they divide into a daily periodic rate. And in this case, it's 0.0202. And then you would multiply that by the number of days in a month. In this case, we use a 30-day month and we get $60.60. So every month we're talking again about a 12-month period, you'll be paying $60.60 in interest on $10,000. But at the end of the day, again, all we're saying is 10,000, and then we're going to multiply that by 7.375, which is just $737.50. And that's going to get you, obviously, the 10,737.50. that's your HELOC in a nutshell. You can do the math. It does get a little bit more complicated, but it all comes back to generally your interest that you would pay over 12 months on a 7.375% variable interest rate is going to be $737.50. So if you compare that to a credit card offer, again, I opened mine up, and this is actually a really good cash advance offer right now. You can take out the balance, in my case, the balance that's available on my credit card at a 4% transaction fee with a 0% APR for 12 months. This is important because you can think about the transaction fee similar to an interest rate over the 12-month period, because they're going to multiply whatever money you take out by that transaction fee. So in this case, this is $10,000 times 4%, which is just $400. So your total balance that they would charge on your credit card if you sign up for this offer is $10,400 on day one. Obviously, these two are not the same. The simplest of math, you're going to have to figure out which one you would pick. So if you have an offer like this versus a HELOC, you can see the numbers are not the same. Couple things to think about though. One, you do, just like in this example, you're paying at a minimum $60 a month. In this case, you almost always have to pay 1% of your balance every month. And so at the end of the 12 months, you'll pay about $100 a month on that one. You're actually left with, the math says you're left with $92.18 at the end of 12 months. Okay. So at the end of 12 months, you're actually right back to this conversation we're having right now, because this $92.18 is sitting on your credit card, and the interest rate at a variable rate at the moment we took the offer is 23.49%. So you're actually going to start accumulating after 12 months interest at a 23.49%. So you'd be multiplying this by 23.49%, which starts to become outrageous. And you come back here and say, oh wait, 7.375 is way better. So you do kind of have to have an exit plan if you consider taking this credit card offer. You've made the minimum monthly payments for the 12 months, but what are you going to do when you get the $92.18? If you already have a HELOC and you have room to take cash out from the HELOC still, then maybe you go through at this 7.375% rate and you pay off that $92.18 and carry the balance over here until you're able to pay it off. Also, when you think about it, again, because this is a variable rate, hopefully in the next several months, interest rate increases will have peaked, and maybe we'll start to see them bring them back down. So in 12 months, this might be less. Certainly, I have no idea if that's the case. They may continue increasing interest rates. We don't really know what they're going to do at this point. But they may pause. They could bring those back down, which would make that an even better decision to then pay that off using your HELOC. There are a couple things to think about beyond just what you do in the 12 months, though. More overall, one of them is purchase APR. So purchase APR is really the rate that the bank is charging you, the credit card company, when you go make a purchase every day. So if you take advantage of this offer, you probably need to have more than one credit card. You would want to shut this one down from being used once you do the cash advance. Because more than likely, can't say for sure, but more than likely your credit card isn't also offering you a 0% purchase APR. And what happens when you do this typically is you start accruing interest immediately on your purchases when you've taken advantage of something like this. So that's just something to make sure you keep in mind. You can find another credit card out there that's already got a 0% for APRs. Just if you use a different credit card, make sure you're paying it off every month. That way you don't accrue interest, most of them at some of these ridiculous 23, 30% rates. If you don't have a credit card today and you're thinking about, is this deal out there? I'll link to a couple. I was looking around. I saw one from Bank of America that's got both. If you sign up for it, it's got a purchase APR and a balance transfer APR at 0.0%. There's also a couple out there that do have a cash advance. So again, something to take a look at, especially if you don't have the offer available today. It's not final. You can take a look around. The other thing is credit score. So, in this example, we're not really talking about our credit score at all. in order to qualify for a HELOC and get a decent rate, you probably have to have a pretty good credit score in the first place. Obviously, taking out credit cards that offer these kinds of offers are also going to require you to usually have a pretty good credit score. Now, what we're talking about here could very well impact your credit score, right? We're talking about carrying balances on your credit card, carrying balances on your HELOC. Two things to think about. If you're not making any major purchases in the next 12 months, maybe this doesn't matter to you as much. If you subscribe to the Dave Ramsey thought process, right, he wants you to pay everything as quickly as possible. So if you're doing that, you shouldn't worry about your credit score anyway. But it is something to think about. If you already have a credit card and you load up the balance because you take out a cash advance on it, the amount of debt that you have compared to the amount of credit that's been extended to you, that ratio is going to definitely go up here. Over here, HELOCs aren't typically $10,000. You're going to take out a HELOC for $50,000, $100,000, $150,000. So taking $10,000 out on a $100,000 or $150,000 HELOC, the amount of credit that's been extended to you versus the balance that you're carrying, the ratio is much different than it is over here. So this one likely would impact your credit score more. I can't say that for sure. I don't know the credit score formula, but conventional wisdom would say that in particular. So that's one other thing to be thinking about. Hopefully that's helpful. Obviously, there's pros and cons to each. You kind of have to make the decision that what's best for you in your situation. Consult with your financial advisor, a tax accountant, whoever it might be that helps you make your financial decisions to see what's best for you. But I just want to make sure that folks aren't forgetting that there are some credit card offers out there that are advantageous to some of the other financial products that are out there on the market right now.